Can you hear? Okay, great. Okay, so our moderator is not here, so we try to improvise things and make it very casual. So it makes it like a discussion between me and Terrence. To start off with, I think Terrence, maybe you can introduce yourself.
Hi,
Sorry, already.
I'm Terrence Hooi, CEO and co-founder of Singular Global. So we run a decentralized exchange headquartered in Hong Kong with operations in Dubai and offices in Japan as well as Malaysia. So back in 2017, I was really fascinated about how the early days of DeFi, where a lot of protocols like RV, Compound, Solana started popping up, and I was early investors in those DeFi projects. And one of the things that really intrigued me after quitting my investment banking job about 10 years ago was that all those DeFi protocols could potentially disrupt the existing financial markets. And with that said, after starting our own decentralized exchange, we now have about 155,000 users from all around the world, from 155 countries, and with that, we are looking to expand, to other, I would say, emerging economies as well all over the world.
Okay, great. So I'll introduce myself. I think I spoke at IFX 1 or 2 years ago. Back then, I was a fund manager. I was managing a 250 million fund for family office. Then early investors of a lot of Web3 and fintech companies. And one of the prominent ones were Animal Card Brands and A16Z. So we did parallel investment with them into the likes of Polygon, Decentraland, and the list goes on. Fast forward today, I joined Tokenized Exchange, the second largest exchange in Malaysia. It is regulated, and we're getting our Singapore license and a couple of. I think our game plan is to be the most regulated exchange in Southeast Asia before we're building the whole CDFI ecosystem, because we want our clients get access to higher yields as well, which is what Terrence mentioned. Okay, I think to start off the topic, right, since we are both in the SEX and DEX game, right, so have you seen the evolution of the SEX and, prompting out, the likes of DEX, and what do you think the key differences between these two?
So back in 2017, if you guys can recall, there was a boom in ICOs, and all the project seems to be like raising tons of money with ICOs, right? And 2018, 2019, we see a little bit of a bear market into those crypto projects. And I personally, I invested in an exchange called FTX. And as you know, what happened to FTX about 2 years ago, after the collapse, we started to realize, what if there's a better system out there that could allow anyone from all around the world to connect their wallets, a Web3 wallet, and trade in a more decentralized way, right? So it's very frustrated with a lot of centralized sort of exchanges, having single point of failure. And whereas DEXs, what we have seen, perhaps 3 years ago, if I'm sitting here, they're doing about $1 to $5 million daily transaction volume. So DEXs are going to swap today is doing between $2 to $3 billion per day. And we have come a long way. So DeFi DEXs has grown by, I think, more than 1,000, or even more, I think about 5,000%, in the past 2 to 3 years. So that's what really got me into DEXs, and also how do we actually create an open and global financial tool for the masses.
Okay, I second that point, but I have an additional point. I think that, when everything started with this cryptocurrency craze, right, it was only SEX exchange. And because of SEX exchange and it's getting more and more regulated, you only can trade this much of exchange. If you want to list a coin on Binance, it costs a couple of $1 million. So the barriers of entries are so high and so tough that, a lot of startups, a lot of entrepreneurship, and a lot of companies couldn't go into market with good strategies. And, aside from that, you seek higher returns. You hold your Bitcoin. What do you do with your Bitcoin? You hold your Ethereum. What do you do with Ethereum? And that gives rise to this thing called staking, and everything goes right to decentralized finance. And this decentralized finance pop up right. One of the things that did really well was Dexus, because if you want to list a coin, you did the project really well, and you want to list a coin on your central exchange, it costs a lot of time, a lot of money, a lot of due diligence. By then, the project might not take off. But how about go-to-market strategy on a DEX? Like recently, the whole craze about meme coin getting listed on Solana DEX and everything pop up. Like last week, there's one that popped up like 700%. It's just like that. It's just the barriers of entry. Whether it trades well or not, it's not our for us to judge. But at least the DEX is a good avenue or a platform for us to facilitate transactions like that or facilitate ideas like that. So this gives rise to a lot of users, a lot of companies going into that scene to see whether we can bring it to another scale, because for blockchain or with cryptocurrency, it has to be decentralized and more importantly low barriers and entries for projects to come on board and really facilitate accordingly.
So to Carney's point, I do agree that when it comes to DEXs or DeFi, it is very much permissionless. We come from a world, I used to work for an investment bank. A lot of things used to be permission. Like even listing coins in centralized exchanges like Binance. If you don't have $1 million to list on Binance or maybe tier 1 exchanges, what's going to be the option 2, right? Option 2 probably go to a bunch of tier 2 exchanges, which a lot have, for lack of better words, wash trading. 90 or 95% are just fake generated trading volume. But when it comes to DEXs, there's a very interesting innovation which is called an AMM model, an automated market making model, which never before existed, right? So if you look at centralized exchanges, even market makers or whatever, everything is on a central book, right? So in a central book, you can manipulate whatever orders you want, but it's still not organic. But on DEXs, everything is open, transparent, and anyone can trace, which wallet placed that trade, whether or not that transaction went through. And when it comes to DEXs, one of the challenges that is still, most of DEXs are facing today will be low liquidity. And for those reasons, I believe that liquidity has come a long way, especially in the past 2 to 3 years. So now we are just scratching a surface. In fact, if you look at daily transaction volume for Binance, it's at about $11 billion. DEXs is up at about $4 billion. Think about what's going to happen in the next 3 to 5 years, the volume for DEXs. And, a DEX, like singular DEX, we can already allow anyone to connect their Web3 wallets like a MetaMask, Coinbase, Binance Web3, OKEx, or even Ledger Live, right? Which makes it so universal that it is just a P2P trading platform. Anyone could list their tokens as well, permissionlessly, just like Uniswap. Create your own liquidity pool. And to my point earlier about AMM model, right? The reason why it's so innovative is that the more capital, instead of spending $1 million paying Binance, why not spend that $1 million, create your own liquidity pool, and let any traders trade that token globally?
Great, I think great insights on that. Okay, so we talk about MetaMask, we talk about Uniswap and stuff, and the SECs have been hard on all these platforms. So what do you see in the likes of the future of this DeFi globally, in the regulatory landscape, or what's going to happen in your point of view in the next 4 or 5 years for this?
Very interesting question. So we have consulted the top legal counsels around the world because there's no clear guidelines so far for DeFi. In fact, there's a paper that was published, I think in Spain, called IOSCO, the IOSCO paper, where it tracks like the top regulations around the world about DEXs, and that's non-existent. But that's a good thing because it allows us to move really fast. When we built our DEX, we launched the first week, we got probably about 500 users. The second week went up to 35,000 users. Uniswap probably have about 100 million users. And Binance have about, let's say, 200 million users, right? Think about the global underbanked population. People in the Philippines, people in Indonesia, people in Sudan, Zimbabwe, where perhaps the local currencies could be very volatile. So instead of like holding their local currency in the form of why not just, hold it in the form of USDT or USDC, right? So another sort of interesting trend that we're seeing, especially for DeFi and DEXs, is that it is starting to replicate what Wall Street has done. So for the past 100 over years, I mean, if you notice, right, most of banks and everything, right? And in fact, if you try to everyone, withdraw money using an ATM with just one bank, we call it a bank run, because the banks don't have all the money kept within the banking system, right? And when it comes to DEXs, DeFi, or even self-custodial wallets, which is very disruptive because now anyone can hold their own crypto within their own wallets, right? Centralized exchanges wouldn't allow you to do that because you still have to park your crypto or your money with centralized exchanges. Now, after the collapse of FTX, Terra, all those single point of failures, people are starting to realize, what is the core team over here? Who should we trust? You know what? People are starting to realize that why don't we just trust smart contracts? Why not just hold it within my own wallet? And I could be keeping in a ledger, hardware wallet, or whatever it is, but I still have full control over my own assets. So, to sum it up, we're seeing a shift where people are starting to move from centralized wallets into self-custodial wallets to have that full 100% self-control.
Okay. I agree, but I disagree to something. So what I disagree on, I think that whatever that moves, the government wants a pie of it. They want to tax it, they want to regulate it, they want to... So, and also the fact that money moves so fast in the digital asset space, whereby some laundered money or some things can go through the DEXs. So that is where, the likes of SECs, MAS in Singapore, everyone wants to see how to... Like in the Singapore aspect of thing, they don't see a hard and fast rule to regulate DEX, but they say zero staking, no staking at all. For DEX exchange, you cannot run it through the Singapore side of things. Basically, when you want to off-ramp, the bank partners will not be helping you and stuff like that. Whereas you see it in the Switzerland side of things, they are open to DEX, they're open to staking models, but you need to just register an office there and say. Hong Kong say no to even stable coins for now, the USDT side of things. So I would say, every country is changing their language, but I think at least the fact that they are evolving towards that, the openness of digital assets in general. Okay, so my take is, I think in the next few years, DEX could be potentially regulated, but into a certain extent. One thing I know that the Asia government or monetary authorities dislike is high leverage. So this prop DEX thing, right? If there is gonna be maximized leverage, like 100 times or 500 times, like what Binance offer, it's close to impossible that they'll let you run, because that is where you hurt your retail the most. The second thing is, when you want to stake a product, right? The regulators will try to understand what's the underlying, like what do you stake it on, how do you get that yield? Is it invested on real world assets to get that 10%? What is it on? If not, it's just like a money game per se, right? So all these things have to be looked at in the next few years to make sure that it's a product viable for the retail. Because then what is there for the government or the monetary authorities, right, is just to protect the retail, and they don't want to get that hurt. So I see that in the longer horizon, and everything takes switch from SEC. So everything revolves around election, right? With Donald Trump, Kamala Harris talking about how they're going to regulate crypto. Donald Trump is open to that, and let's see how it moves. So that's what I'm looking at from the DEX, and I agree to what Terrence says, that everyone is going DEX, because I think it's a new generation out there today, whereby I don't care whether you're licensed or not. I don't care whether, as long as the product is viable, I like the product, I get access to the product, I'll come in, whatever means I want to buy USDT to get in, I want to go in with, my fiat, or I want to go in with this noise. Like for example, if you hear some big news about this hamster combat on Tor network that is unachievable through the normal centralized exchange, everyone is crazy, and they create DEX and they create wallets, right? Web3 wallet, just to get airdrops from that particle. So they'll go all the way out, and I'm not surprised by the volume mentioned that all the DEX actually are keeping up their volume, and everything is going increasingly interesting in the DEX exchange. So that's the thing. And then the last thing to talk about the DEX, I think is like, uh, this is an ecosystem. So you see that, I'm also a venture person myself. A lot of things are going to the Bitcoin restaking model because there's so much Bitcoin out there. I think more than 50% market cap of the Bitcoin out there. But what do you do with your Bitcoin? Other than holding it? And it's not yet recognized as like a centralized currency yet. But what about using Bitcoin as a lending protocol to earn more returns, like a 10% return on that? Or what if using Bitcoin as a source of currency to go into a DEX rather than using USDT, using a Bitcoin and trade all the rest of currency that's pegged to your Bitcoin? So all these things, all ideas are coming out. I think, and the big banks are coming in. I think the latest project that we are coming in is like BitLayer. So BitLayer is a Bitcoin L2 whereby they allow restaking of Bitcoin. And the big boys like Franklin Templeton has entered the scene on a Bitcoin L2 program. It's unheard of in the last few years, but you suddenly have it here. So that's why I'm saying that everything is ever changing, evolving. But the thing is, like, new money, evolution is coming. And it's either it's here to stay, whether you adapt to it or you just get left behind. So that's my take.
So very interesting. A few topics I want to cover today, which is the metaverse, as well as integration of the metaverse towards DeFi indexes. Because let's face it, by the end of the day, there's still some entertainment element in financial sort of instruments, right? People buy the meme coin. Look at Dogecoin. Dogecoin is worth what, $3 billion? And just because a few tweets from Elon Musk and the coin just went skyrocket, came crashing down back again. But people are starting to use like meme coins as a vehicle to speculate on something cute, something visual. It used to be NFTs. So let's talk a little bit about NFT. We don't hear that a lot today. What happened to NFTs?
So I think maybe I'll start on two topics. So first, let's talk about Metaverse. Actually, little did we know we are living in pockets of Metaverse. So what is Metaverse? It's just a closed-loop ecosystem where everyone can have fun, share ownership and everything. But let's look at our apps today. We are on Facebook. We are in Facebook Metaverse. We exit Facebook, we are on WhatsApp. After we exit WhatsApp, we are on Instagram. So we close the whole loop on that. And we are in Twitter's Metaverse as well. And like it or not, we are in TikTok and the pocket of Metaverse. Like in today, people are saying that, how can so much Metaverse survive? But just look at your phone today. You have more than 30 apps on your phone. And do you use every app? Actually, on average, you open 6 apps a day, at least. And some people can even open like 20 apps a day. So this is impossible. I think the new world today, Metaverse can exist. But what do you do in Metaverse that is so different from the Facebook? I think it's called Web3, whereby you share the content, you share the ownership. Like you post something on Facebook, your photo. It's not yours, it's Facebook. The moment someone complains on you, they remove it. And so it's not yours. The ownership is totally not yours. With Web3 about, you own that thing. And how do you own it? It can be a form of NFT, whereby you own that NFT, you can resell it. And NFT has evolved from the start, right? Last time, I think the first NFT that got into craze was Bored Apes, right? Whereby it went up all the way high when Justin Bieber and Snoop Dogg went in. It was more of a clique or gang, whereby everyone, all the famous people want to get involved. So NFT started like that. But as it evolves, right? Just imagine, right? Games adopt NFT. How do they adopt? It's very simple. Like, last time when we played like trading card games, right? Like Magic, your Pokemon cards, right? We trade those cards, but it's physical cards. Then we go into the PlayStation system, or we go into the computer system, whereby we play like FIFA, we own a lot of characters in the cards, right? But it's not tradable. There's no value to it. But what if those cards are NFTs? From FIFA 2013, this NFT, you can convert it to FIFA 2024. What if your Street Fighter game in the 1999 Street Fighter 1, then compared to the Street Fighter, you can port that character over from the olden days back to the reality through an NFT. But in the actual system, you can't. Only NFT can do it. So it's a stored value of thing. So this is one thing about it. And NFT has evolved. NFT has evolved into real world assets. How do I say that? Because I think when we started in 2020, there was a lot of craze about people tokenizing watches. Like one Richard Mille, you can't buy, so you can fractionize it to like 2,000 of them, sell one and hold, and you just wait and hold for the value. But actually, you really, really own it. I mean, why would you want to hold an NFT or Richard Mille rather than wearing one, right? So the value wasn't that precise on that. But now, fast forward today, NFT has pivoted into tokenization, like real world assets, right? Property, you can degress it, you can fractionize it to like, from a $5 million property, it can be digressed to even a 10,000 ticket. And this 10,000 ticket lists you early barriers of entry, and you can get access. So I'm from Singapore. Okay, I don't get access to Thailand properties with higher yields, like around 11 to 15%. In Singapore, the yields are around like 6. For normal property rental, it's like 3%, but if you go to the commercial ones, it will be like 6 to 10%. But in Bangkok, because of the low barriers to entry and the high rental rates, right, you can get more than 10% yield. So how will a Singaporean get access to a Bangkok property per se? Through tokenization model, whereby we can invest at 10,000, we can get access to yield to $10,000 worth of Thailand property that can deviate or generate you around 11 to 15% yield. And so this tokenization thing has really opened up globally, whereby you can get access to higher yields, globalization. You can go to Dubai property, you can go to anywhere you want just to get the real. That traditional finance can't get you there. So that's why I see the whole evolution from not only Metaverse to NFT, and this whole summer is called a decentralized ecosystem with DeFi powering it through the finance side of things.
So I want to talk a little bit about a very important trend. Starting a little bit, if we rewind the tape a little bit back to the 90s, where there's a dot-com boom and bust, right? And we are seeing a lot of Web2 companies like Yahoo, Google, Facebook, and they own your data. So what do they do with your data? They're selling it back to advertisers. So in Web2, what we're saying is read and write. So write is where social media platforms like Facebook, Twitter allows you to write your own story and publish it to the world. But again, you still don't own the posts that you post out there, right? And companies like Twitter or Facebook or Google is using your information, as mentioned, to sell back to advertisers because it is still, very much a profit-making company, right? But now we are seeing a shift, whereas people can read, write, and own. Now, own is a big thing. So in Web3, moving from Web2 to Web3, when you can own, that means like what Carney has mentioned, NFTs, art, or tokenized assets, like a real estate or whatever. When you can own something, you value it, right? NFTs could be just a vehicle. For instance, if you own an NFT, you can go to Bangkok, Singapore, or even Hong Kong, and you can get access to exclusive, let's say, parties or events, right? It could be just, a side thing that accelerates the main product. But by the end of the day, what is the main disruptive innovation we're seeing here? As an investor, invested in Tesla, early days of SpaceX and all that. For Carney, no different. He runs a family office, invested a lot of disruptive innovation. Now, what's going to be the next big thing? The next Google or Facebook when it comes to Web3. Now, that's an interesting thought because if you take a step back, we are just scratching the surface right now for Web3, right? People can now own their own crypto assets in a self-custodial wallet. That is just like a passport or gateway into all those decentralized apps that we are seeing popping up. Now, in Web2, of course, we talk about apps, right? In Web3, we call it dApps, decentralized applications, right? Whereas you can also be part owner of the applications or the platform that they're trying to build. Now think about how powerful this is. If you're a builder, right? That means that you could accelerate your building process, maybe 3 or 5 years ahead. You could airdrop your own tokens to your early cohorts of users to gain maybe like 100,000 users, which is exactly what we did for DAX. And you could allow people to vote for the next iteration of your product. Now, you've seen this happening with a lot of Web3 companies, including, I'm not sure if you guys heard about WorldCoin by Sam Altman, where you have to scan your ops in some weird-looking ops, and you can get the ID. So they didn't pay any marketing dollar to Facebook or Google. So what they did is that they have a ton of tokens. They just airdrop those tokens saying that, hey, look, we're going to be launching this token before our app goes live. And guess what? They got like 1.5 mil user signups. Now, interesting, Carney mentioned a little bit about Sony as well. In fact, we're already in talks with Sony in Japan. And Sony have a layer 2 project called Sonim. And Sony, of course, has so many assets like Sony Pictures, Sony PlayStation. So it'll be very interesting in the future. Let's say if I'm a gamer, I could really patch my existing assets to the next game or to the next platform. So it could be universal, as in like I don't have to be on let's say the PlayStation network. I could very well patch it to another platform like Xbox or whatever it is, right? So to think about like Web3 and its opportunities when it comes to DEXs or trading or even like the metaverse, you couldn't just go into just one niche. But Web3 is a very broad topic, right? But when we start to zoom in smaller into like DeFi niche, into let's say the metaverse, NFTs, by the end of the day, you're gonna ask yourself like, what are we trying to build? What is the problem you're trying to solve, right? Like as mentioned, like DeFi, there's so many applications like compound RV and all that, solving lending problem, right? Perhaps if you look at NFTs, it's solving the community issue. People want to be together, right? If I own art, I want to know that I own this art. And moving forward in the next 3 to 5 years, how do we potentially integrate all those little components together so that it could really help your business or whatever project that you're building, but starting from day one, having the mindset that this product is going to be global. Carney, you have some thoughts about how do we, what's your thoughts? Let's say someone starting a project, or I know you advise quite a number of fintech builders or even students. What advice would you give?
I think that's the question I always ask myself when I start a business as well. What's the business model? Does it make money? That's first. Second is why people use your platform and switch over from, like I'll tell you, you want to create a killer app to kill Facebook. How are you going to kill Facebook? Yeah, and when you say it's impossible, TikTok came out. And when you say it's impossible, Twitter came out. So it's possible, but what is the killer app, killer feature that brings it? So that's the thing. And if I buy in, the money comes along. If I don't buy in, I'll have more questions. Yeah, but don't be defined by people or saying no to you, or people saying, I don't want to invest, I don't think your idea. I think every opportunity opens up. We are just here to come and refine it. We are just here to help you build out the business model. And the more important, we are here to keep questioning. And when you solve the question, this thing become more indestructible, right? Then you can go to market better. Because if you pass us when we see so many projects on a daily basis, right? Then you can, reach out to even bigger investors and you can solve the problem. I think today the world is not only about what problem do you solve, but what is the killer feature that can bring you or bring other community to you. I think the world right now has changed so much. When the likes of social media came out, right? I think the whole first trend, right, is all about community. Okay. Then after the community effect came out, right, there was this thing. I think I run a forex company before. I call it the network effect. So last time when we started, it was a lot of introducing brokers, teaching and guiding. But majority of a lot of adoption right now for forex companies as well is influencer marketing, social media marketing, and it's a key. I call it the network effect. So how do you bring that network effect to the next one? And that's where Web3 came about. Okay, when I started crypto in like 2016, right, there was only Bitcoin. But I found out what got me really interested was Ethereum. And that time there wasn't any USDT and stuff. We were just trying to struggle up. Then what happened was a lot of the ICO, pump and dump coins. The real utility that came out, right, to me that changed the whole crypto ecosystem was stable coins. So people know how to trade, people know how to align it with the USDT. Then on, it started to grow. But what was the exponential? I can tell you, it was the Metaverse and NFT that shot the thing up. That brought all the degens, brought all the people from the remote, who wants remote working, they want flexible working, all into the scene. And that was also aided by this phenomenon called the gig economy, whereby the Uber, the Grab, the Food Pandas all come in. I want it faster, I want it now, I want it immediate. And I want it anywhere around the world. And this whole era has made people very impatient and very reliant on digital apps. So these days, I'll give you an example. If without Food Panda, I think 20% will be have a lot of complaints. We know a lot of things will have to readapt again. So this whole gig economy has spur a lot of interest and a lot of adoption to the Web3 through the NFT and what, because they like the whole concept of the culture whereby I want the community, I want the ownership, I don't want the government to hold us, I just don't want a big company, I don't want to work for a salary anymore, I want to remote working, I want to be entrepreneurship.
Right. So to wrap this panel up, because we have less than half a minute, by the end of the day, we just gonna ask ourselves, what problems are we trying to solve? And if, any new technology at the beginning, it all looks like a toy, right? Electric car looks like a freaking golf cart, But then after that, Tesla sort of disrupted the whole market. I think it's gonna happen like for the metaverse DeFi dexes as well. We just don't know what's gonna happen next. As a builder, we're just here to solve like real world problems, right? And with that, I just want to end this note as in like, the metaverse is actually in your hands. Everyone has the power to build something that is meaningful to the world. Thank you.
Thank you so much.